focus on the NextGen core in action with Nelson Wootton of Cascada and Conrad Ford of Alica.
Hi Conrad. Feels
Hey,
like
how you doing?
only 24 hours ago we were doing something similar.
Yeah, we're becoming a bit of a double act.
Okay, so look, to start with, I think the audience would benefit from understanding who Alica are, what you're targeting on, and some of the achievements.
Yeah, so Alica is a new bank. We are a bank, by the way. It's a misused word, of course, these days with the phrase neobank. We are a bank. We're a UK bank focused on what we would call the established SME segment. So let me unpick that a bit because it's quite important to what we're talking about. Everyone knows the segment SME, but when you break down the numbers of SME, the demographics, in the UK, roughly speaking, there's 5.5 million SMEs. 5 million of those are micro businesses. They're extremely small. About 500,000 are what we would consider target customers, established SMEs. And fun fact, and I'm so happy that VCs have not downloaded publicly available data tapes to figure this out because they've wasted a lot of money investing in the micro business segment. But here's a fun fact. Although our target segment is a tenth of the number, it represents a much bigger segment of the economy. So total turnover as a proportion of GDP. And actually, when you look at financial services revenues, it's sort of even more extreme. So our customers, less than 10% of the population, but for example, about 80% of SME lending. There's a reason for that, by the way. Micro businesses are very, very small indeed. Although there's millions of them, it's quite common for a business to have £20,000 of turnover, whereas our customers would typically have many millions. And when you look at financial services revenues, micro businesses are consumer-like. And actually many of them will just run their business off a personal current account, and crucially when they borrow they're going to use a personal credit card. So we're focused on this segment which largely speaking has been left alone by the fintech sector so far. And we're fairly unique as kind of building a full service challenger. And as we're going to talk about in a minute, we're kind of a blue ocean strategy because we're going after a segment that the big banks, the incumbents, don't really like and really struggle with. And that's crucial to our strategy and has turned out to be crucial to our technology choices and technology decisions. So the big banks in the UK, the market is dominated by 4 or arguably 5 banks. You know that you know who they are. It is effectively an oligopoly in the SME segment. But those big banks, they make the vast majority of their revenues from very large corporates, the Vodafones of this world, a few thousand, or consumers, 30 million households. Now, they actually quite like micro businesses because they can stick them on a consumer banking platform. They're pretty much the same from a banking perspective. But our customers, established SMEs, are really awkward for those big banks. They are too low value for what they call coverage, which is throwing lots of high quality people in suits at the problem. And they are too complex for a consumer banking platform. So we really are pursuing a blue ocean strategy, which is effectively, if you have a focused, dedicated operating model, and of course accompanying technology, then you can 10x the big banks. Now I'm going to stop there because the theory is a challenger has to 10x the incumbents. I'm a fintech founder. I've built up a fintech business myself before I did what I'm doing now. I concluded you don't have to 10x. So I just realised 10x in the audience, aren't I? You don't actually have to 10x, but you do have to many x. Yeah. My current view is you probably have to 4x. So you don't really have to 10x, but you have to be dramatically better than the incumbents. Yeah, that I have come to believe. If you're going up against the big banks, they have almost everything in their advantage. They have hundreds of years of history, literally in the UK. They have millions of customers, huge distribution, huge brand presence. You are a little boat in front of a super tanker. So you'd better actually A, find a blue ocean to compete against them, and B, be extremely nimble and agile in how you go up against them. So yeah, you don't have to 10x, but you certainly have to 5x or 4x. So maybe you need to change your name.
Cool. Okay, so Cascada is your core banking vendor. Let's start by just briefly defining what core banking means, because often depending on the size of the financial institution, it means many different things to many different people, and it is a bit of a cover-all for all sorts of stuff. What does it mean to Alika?
Yeah, I was actually joking the other day. If I'm going to keep talking about core banking on panels, I better figure out what it means. It means many things to different types of institutions, and I think it really depends on your starting point. So the Alika perspective of core banking is quite minimalist. So for us, really, we consider it to be product ledger. So what do I mean by that? The ledger for running our treasury, for example, is not really a banking thing per se. For example, we run our management accounting on NetSuite, which can work in pretty much any sector. But a product ledger for us is kind of thing. Now, that's an Alika perspective, and we'll talk about why we think in those terms. But let's say, for example, you are an existing incumbent, let's say a subscale incumbent in the market. In other words, you've already got the customers and the presence. You may actually think quite differently about core banking, which is if you want to upgrade, you probably want more of an end-to-end upgrade. But for us, it's actually quite a minimalist view of an API-led product ledger. And let me explain how we think about it. So I talked earlier around how we are going after a segment that is structurally underserved by the big banks because they invest all their money in either a corporate banking platform or a consumer banking platform. And every year, SMEs promise that this time we're going to invest in SME, and then a regulatory crisis comes along and they scrap that at the last minute, and that's sometime in November, and the £50 million gets taken away for some remediation project. So it's structurally underserved. Well, what does that mean in practice? It means that if that were not the case, then somebody would already have built the perfect platform for our segment. And A, we wouldn't have an opportunity to go after, and B, we would have gone and bought an end-to-end platform. But actually our segment is not very well served by the vendors. And crucially, because we are trying to build a very valuable business, we're not here for fun. Alika grew its revenues more than 5 times last year. Our lending book is well over £1 billion. It's growing very, very quickly. We are trying to build a big business, and we want to have a defensible competitive moat. And that means that we have to actually take the leap of faith that we're going to build proprietary capabilities. So on the one hand, nobody had done this well enough yet, and on the other hand, that's an opportunity for us to build a platform for that segment. So for us, core banking is that kind of base layer of product ledger. And it must be API first because we want to build a bit on top. So why did we not build our own product ledger? I think is a good starting point. Well, when we think about technology, we think that anywhere where we think we can build a competitive advantage, a sustainable competitive advantage, why don't we do that ourselves? But anything that looks like a lot of work, fairly commoditized, and let's go buy that. So let me give a really easy to digest example. Open banking connectors, right? There's zero chance that I will allow us to stand up 2 or 3 squads worth of product development resource to go and connect to every single bank in the UK, and then continue to maintain those connectors, because some poor other sod has done that, and in fact there's about 10 companies that offer that. So it's commoditized, it's a lot of work. It's not hard to do, but it's a lot of work and it's commoditized. I'll go buy. And I will build things in such a way that if I'm unhappy with that supplier, and I'll rip it out and replace it with another one because it's commoditized. But a warning this. So for us, product ledgers is the same. So if you were, for example, to talk about lending, our customers are very complex in their lending needs. Often they will have multiple products, lending products in their product stack, all the way from a property loan on their factory to assets on their vehicles, and then some working capital. So they have a complex capital stack and also a wide range of different lending products for our customers. So a configurable product ledger that allows you to effectively build an effectively infinite number of lending products. And you basically say, create this lending product, and it spits out statements and loan calculations via API. That's the kind of stuff it takes a lot of time to build that. And it's not, for us, particularly strategic. Just the ability to be configurable and agile is important for the technology itself. So what really matters to us is the bit that sits above that. So first and foremost, data. So when we think about data store or data warehouse, it's not a kind of read-only repository of management information. And I think, by the way, that's a great mistake that big banks make all the time. They see data warehouses or data stores as a read-only way of looking at for the management team to see what's going on. Yeah. Now, of course, that's an important use case, but actually, it's the kind of operational data store. It needs to be the operational brain of your business. I will never let that be in somebody else's control. Yeah. Just as if you put all your customers on Salesforce, they're not your customers anymore. Salesforce own your customers, right? So we would take the same view. So the operational data store, let's call it, and then the business logic layer of the kind of the proprietary customer engagement. Again, we want to own that because we don't think anyone's done it well enough yet. I would probably think differently if we were going after a more well-served segment. Yeah, so consumer, for example, there's probably some very good uses there. And then finally, and most importantly, the customer engagement layer. So in other words, the apps, the digital, and the attempts to do omni-channel. I say attempts because we certainly haven't nailed that yet. So for us, we wanted a core banking provider that gives an API-first, highly modular, highly configurable product ledger on which we can then build the rest of our universe where we build our sort of proprietary capabilities. And the proprietary bit really matters. We recently got investment from TCB, one of the world's leading investors. They're investors in Revolut, Airbnb, Netflix, Spotify is another of their portfolio. They are obsessed with moats. Yeah. I spent my last summer using the word moat about 10 times more in 1 month than I'd used in my entire rest of my life. So what was our defensible moat? And it turned out it was this operating model of this ability to deal with the complexity of our customers and the underlying technology. That turned out to be the moat. That's why they invested. And it was actually quite useful. Actually, my own strategy, I think, I am responsible for strategy, and that kind of got refined in that period. So yeah, for us, we have a particular view, and it's a very minimalist view, but it's not necessarily the only view. It just really depends what you're trying to achieve.
Cool, that's incredibly insightful. What I'd like to talk about next is what I've kind of noted down here as the sins of vendor selection. Now, clearly, I'd like to think that it was a successful selection, but it's nice to touch on the successful story, but actually I think there's a lot to learn from the mistakes made when selecting vendors and partners to bring in, and that wisdom would be something that this audience would really gain some value from.
Yeah, and believe it or not, I can't believe I'm saying this, but I'm actually having to do some legacy migration right now. This is a 3-year-old bank, right? So mistakes have been made. Let's say not on my watch. So let's just unpick that a bit. So to get a bank license in the UK, you need to line up lots and lots of senior executives who have spent their entire last 20 or 30 years doing that one thing in a bank, risk in a bank, finance in a bank, operations in a bank. And it tends to be a big bank because they want to see those CB names on the bank license application. Well, guess what? Bless them. The moment we got the bank license, which is one I joined, by the way, I joined post-license. Almost, very careful with my language. It's almost like ants. They start rebuilding a miniature version of the thing they were in before. And it is utterly different to do vendor selection and procurement in a big bank versus a small one. And fortunately, I have learned this the hard way. Yeah. So when I was at Barclays many years ago, I had some of my responsibility around credit bureau, where we were with the leading credit bureau in the UK. We were spending tens of millions of pounds a year. Yeah. And then I went off and started my own startup business, which eventually became a success, but it took a while. I was then with the same vendor spending £20,000 a year, so 20 million, 20,000. Let me tell you, it's quite a different relationship. And if you've spent your career in a big bank, you really probably just don't get this. That if you're no longer in the big bank, you no longer hold the cards, right? So, point number one, you've got to start from where do you actually sit? How strategic are you to the vendor? And I have written a rule. This is a rule. This is one of our operating principles because the amount of pain I went through unpicking this stuff. I've written a rule in our operating principles. If you are choosing a technology vendor, it is fine to choose one of the big vendors as long as you are happy with the off-the-shelf capabilities. Yeah. If you want lots of bespoke work, in other words, something different to what you're buying, you either build it yourself or you go and find a vendor for whom you're an important client. Yeah? There is no middle ground. Yeah? And there are many, many attempts to convince me. It's like, no, they've really committed. It's like, it's nonsense, right? So I'm happy with either of those, just to be clear. What I will never tolerate is the bit in the middle, yeah? Because I spent quite a lot of my first few months at Alaka Bank sitting in front of somebody who would explain, well, they've said that they'll be doing this, this, and this after we launch. And just sitting with my head in my hands thinking, how could these people be so stupid? Right? Of course they're not going to do that. You know, pre-sales is over, you're now going to get the B team, yeah? and actually, there's another thing, which is there's a current fashion for no code or low code, these kind of like, you can configure it yourself. Oh my God, yeah. Every time I've ever seen someone go down that route of kind of like you can configure it yourself, yeah. Suddenly you get there'll be some modest professional services, right? I hate professional services. Sorry for anyone who does professional services. And then slowly but surely it turns out, well, actually you can't configure that yourself. We'll need to do some proprietary. Oh my God, right? And it just begins to mount up. It turns out, you know, maybe at some point in the future this kind of solution will be mature enough, but it's certainly not now. So there was also a plan to do the kind of like no code as well, and I literally terminated that vendor relationship and took a hit because that was just an absolute no-no for me. So we decided to build on top. So when we actually decided none of the existing large vendors off the shelf were good enough for what we were trying to do. Therefore, I took the decision we had to find someone for whom would be an important client and can have a real partnership with. You know, in other words, it's a relationship of equals, possibly. Yeah, so that's how we thought about it. So that's point number one. Where do you sit in the food chain? And be realistic. It's fine to buy the big incumbent as long as you don't convince yourself they're going to, you know, do lots of special work for you, or indeed give you the 18. Point number two, yeah, the RFP is the worst possible thing you could invent to choose a vendor. It just drives me mad. Yeah, I mean. Just think about this, right? So there's one scenario in which I would decide to use an RFP to choose a vendor. If I was trying to decide someone to do PowerPoint for me, yeah? Then an RFP would be a really good way. It's like, well, you know, these guys have got the best PowerPoint. Amazing RFP, yeah? But, oh my God, right? You're basically, by sending out an RFP, you're basically saying, sell to me in the medium of PowerPoint, you know, how cool your platform is. What should you really be doing, yeah? You should be saying, this is what we're trying to do. Show us your platform can do this. Literally show, don't tell, yeah? And then the other reason that the RFP is a terrible, terrible way of choosing is because an RFP tries to be that holistic thing all the way to, do they have a child slavery policy, right? I filled in a fair few RFP templates in my time with the big banks. And that stuff, right, if you're an investor, that's not the reason you invest. That's the confirmatory due diligence, right? That's, we've decided to invest, now let's let the lawyers just tick the boxes, yeah? So these days, you can probably assume that the information security is strong enough. You can ask some upfront questions, but fundamentally, you're involving the wrong people at the wrong stage. First and foremost, is this thing gonna give you the ability to 5x your competitors? That's the question to ask. And the only way you're going to find that out is by them showing the platform doing what you want it to do. No documents, yeah, that's what we do. So show, don't tell. And then the final piece of advice I'd give is, I always find it extraordinary how a lot of senior people in technology in big financial institutions are not very technical. Yeah. Is that not mad? Yeah. So just imagine, right? Just imagine. If like Alaka Bank was choosing a new general counsel, and we're like, well, they're a good people manager and they've promised to read some books on law, you know? That's just mad. There's zero chance that a bank would choose a non-lawyer to be a general counsel, so why would you choose a non-coder to be your senior technologist? And that's one of the reasons, by the way, they end up making the wrong technology choices, right? Because only, you know, I would not be as arrogant as to think I'm the right person to choose our technology stack. Our CTO is the most technical person in the organization. That's her decision, yeah? I'll tell her what I want us to achieve, yeah? But she's the person that can actually go and, you know, go and kick the wheels. And actually, there's a bit of a tendency, let's just say it, right? In the large organizations, you have these people who are, you know, they're very good in meetings, and their core competency, frankly, is talking through PowerPoint slides with red, amber, green diagrams. They're kind of program managers, right? These are important people, to be clear, but please don't put them in charge of choosing your technology. So yeah, that's my other advice.
Nice. I'm conscious that we're using up time. Yeah, okay, I'm going to one more thing before we go. I just want to touch on agility, because I think this is an important point, and you guys have got a really great illustration on this. We started working together and completed and delivered a current account. Liz Trust came to power, and the world was turned upside down. Capital markets collapsed, the cost of money changed, everything changed. And I think it'd be really interesting to share some of the changes we in our relationship and what we focused on as a result of all of that.
Yeah, so look, I was a burnt up startup founder. I stepped down from the startup I founded, burnt out, as I'm sure you're feeling this yourself now. And I thought, I need to recharge my batteries. Nothing's happened in banking for 10 years. We'll go there, right? So here we are, right? And now we're in the, well, everyone knows, right? It's the fastest interest rate rise environment in decades, actually, that we're going through in the UK, and of course most of the Western world. So yeah, I talked about the concept of partnerships. In other words, if you're trying to change things together, you probably want an equal partner from a technology perspective. Well, in the early days of building out the products, our current account that we've put on the Cedar platform, we actually had a kind of effectively integrated squads. So the engineers at Cedar would communicate through the tool of Jira, literally on the same Jira boards, the same task tracking, except issue tracking. So that kind of like combined, we're effectively a tribe together of squads. So that was kind of how we attacked this, because we knew, you know, one of my favourite phrases, based on bitter experience as a startup founder, is no business plan survives first contact with the customer. So we knew that effectively we needed to launch as quickly as possible and then just find out what we got wrong about the market. Well, it turned out that we had that on steroids, because we set out to sell a current account, to businesses, and we are selling a current account to businesses. But it turns out the thing they really want right now is savings. So in other words, we are seeing a generational shift of money from business current accounts into savings as interest rates spike up. So just to put some numbers on that, the historical average amount of business cash sitting in savings accounts is about 50% of all cash. It's currently at 20%. So we are seeing 50 to 100 billion pounds pouring into business savings accounts as a result of rising interest rates. So it turned, luckily, our current account we built with Cedar had a attached savings pot. So the idea would be it'd be a cool little feature. So just as at Monzo, you can put a bit of money in your housing deposit savings account and your travel savings pot. We would have a savings pot where you can put money for your VAT bill, VAT bill, tax bill. Well, it turns out that's what customers are buying. So the ability to actually just pivot in real time without, frankly, the statement of work. Another thing I hate is statement of work. There's a lot of things that I just hate, actually. I need to calm down. So the ability just to, it turns out, that this business plan, for good thankfully for good reasons, this business plan is not the plan we're executing. It turns out this is what we're selling. And it's that kind of ability just to kind of like, we're just going to slightly change the direction of travel. And I love, by the way, the Jeff Bezos phrase. He said of Amazon, he said, we are stubborn on the vision and we are flexible on the details. And I love that, The day that Alica stops being about serving our target segment is the day I leave, The vision is stubborn, But how we get there and what customers are looking for in the markets we're in, that's the bit that would lead to flexibility. So it's actually been a huge success at allowing us to just pivot our focus towards, it turns out this bit of the product is not a tiny feature. It turns out that's really fundamental. Let's really double down on that, and it's been a really interesting journey actually. And it's all happening in real time, right? This is not historical, it's happening right now.
Conrad, thank you ever so much.
Thank you.